All right. Good morning, good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest, and I will be your host for today's session. If you guys can hear me out there, let's see some good mornings getting in the chat here. I see Jay already chiming in. Hey there, Jay. Hopefully you're doing well. Manju, good morning. Drew, hopefully you're doing well. So we should be live both on Facebook and on YouTube. So, yeah, if you guys, I see the Facebook or the YouTube side seems to be working. If you guys are over on our Facebook page, just let me know where you're tuning in from here today. And as always, if you guys enjoy these streams, don't forget to smash that like button, subscribe to the channel, or like the page, depending on where you're tuning in from. All of that helps us out, doesn't cost you a thing. So if you want to see these streams continue, make sure, as always, smash that like button there. Volume is a little low. Let me turn that up a little bit. I did notice it looked a little low, but I didn't want to blow everybody's eardrums out. So there you go. That should be hopefully better for you there, Siberia. All right. So once again, welcome everybody to our weekly mobile coaching streams. Today, we've got an interesting topic. Some people absolutely love it if you know what it's about. Some people look at it as a taboo or something that they shouldn't be doing. So today we're going to be discussing a controversial topic, and that is shorting stocks there. So we're going to be getting into not only what it is, but also how to really take advantage of VectorVest to make sure you're getting some of the best candidates to be trading out there. As always, though, we will be, first off, looking at what's going on here in the market today. Then we'll dive into our topic of discussion. And then, as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds through the VectorVest Stock Advisory app. So, volume's low. So, Hamid, I did just turn that up, so it should be a little bit better there for you. I hadn't touched anything, but for some reason my volume was a little bit lower here today, but should be good now. All right, so without further ado, let's jump right into the Stock Advisory app and get started here today. Looking at the very top, as we can see, the Dow is up about 0.6%, Nasdaq's up about 0.7%, S&P 500 up about 0.5% for the session, same with the VectorVest Composite. Now, one thing I will point out here is if you look at the little mini graphs right underneath the tickers and all that, you do notice all the major indices opened up high, but have been since slowly drifting lower here. So therefore, even though we're up right now, we still need to be cautious. Looking at the market timing gauge, as we can see, we are still 3 ticks into the yellow, so the market is neutral, and VectorVest does not advocate buying any stocks at this time. So even with the markets up here today, once again, make sure to always check out what the color guard is telling us here. And then if ever you're not really sure what the color guard is telling us, make sure, as always, check out the daily color guard report Monday through Friday. It's about 5 to 10 minutes long, where it recaps what's going on in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, just simply watching this quick video will make sure that you never get caught off guard and stay on top of things that are going on in the market. Can we see the market timing graph on the app? Yes, you can. You can see the VectorVest Composite. Not the full market timing graph like you can with the desktop, but you can still see the RT and the VectorVest Composite there with the mobile app here. So scrolling down a little bit, getting into the color guard, it's where that gauge that we first looked at gets its colors from, and really the top row of lights more specifically on this. So the first indicator we look at here is the price, which is referring to the price of the VectorVest Composite. If you're new here, the price of the VectorVest Composite is an arithmetic indexed average of about 9,200 stocks that we currently track in the US market. This will give you a better representation on what's actually going on in the market, because it's not just looking at small subsections such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 9,200 stocks out there. The next indicator is the RT, or relative timing, more of that technical indicator, and it's looking at the short-term price trend in the market. Since it's cast on a scale of 0 to 2, above 1 would indicate that the short-term trend in the market is up, and below 1 would indicate that the short-term trend in the market is down. So while the short-term trend is still up, it is lower week over week and flat on a day-over-day basis. The third indicator we look at is the BSR buy to sell ratio, which is looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. So as long as it's above 1, it tells us there's more buys and sells, or that there's overall market strength. And if it was below 1, that would indicate overall market weakness. Hey there, Chris. Happy Thursday. Hopefully you're doing well. And then the trends of these indicators are combined to come up with the MTI, or the market timing indicator. It's looking at the underlying trend of the market, and it's cast on that scaling of 0 to 2. So since it's above 1, the underlying trend of the market is up, but it is moving lower day over day and week over week. Interestingly enough, even though the major indices are up, the MTI is still moving lower on that day-to-day basis here. After that, we then get the trend column, which shows 2 parts to trend each and every day. And the first part is what we like to call the primary wave, which is just simply the short-term or weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than what it was compared to 5 trading days earlier. The second part, looking at the underlying trend, or the MTI, and since the MTI is above that level of 1, the underlying trend of the market will remain up. Then last section here is the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. And as we can see, we still remain in that confirmed up situation as of today. And now, last thing we want to take a look at here on the homepage is the advance and declines at the bottom. And as we can see right now, about 55% of stocks are moving higher for the session, and about 32% of stocks are moving lower for the session. And really, we want to see a 2-to-1 bias when we see the advance and declines to put the probabilities in our favor of any day that we're getting ready to enter a trade. And since we don't have a 2-to-1 bias right now, we're probably just going to be sitting on our hands and being patient. And now, as a reminder, I did promise this last week. We do have a giveaway to do here today. So we'll do that in a little bit. But I did want to remind everybody, I didn't forget, we are going to be giving away a mug from our store. And also, there is a link down in the description of today's video that you can click on and takes you to the VectorVest store if you want to purchase any merchandise, VectorVest merchandise. And I even have a discount code. It's Patrick23 you can use at the checkout, and that'll give you 20% off there. So just stick around. If you want a chance to win that mug, make sure to stick around, and we will be doing that giveaway in just a little bit. All right. So without further ado, let's go ahead and talk about our topic of discussion here today. So first and foremost, we're going to go to the premium. Actually, we'll go to the stock pick ideas, scroll down, and we'll start off with the featured screens. And in here, we'll talk about a few more specifically in just a moment. But first off, let's make sure everybody has a clear understanding of what shorting is. So shorting is basically the inverse of buying a stock long like you would typically do, but with a few more steps in the background that, really don't affect you specifically, that, have to go on to be able to do this. But is this the basic way of looking at it? If you buy a stock long and the stock goes up, you make money. If you short a stock, then as the stock goes down, you make money. The only thing that's a little bit different here is to buy a stock long, as long as you have cash in the portfolio, you buy that position, you have that cash to be able to buy that stock. So therefore, you don't have to have margin as long as you have cash in the account. With shorting, because you're not actually owning the shares, you do have to have margin available with your broker to be able to short stocks. Now, margin is basically just the broker offering you more money than you currently have in the account. So let's say you have $50,000 in there. If you have margin, the broker says, hey, you can, because you have, a good standing with us, you have $50,000 in cash in the account, we'll let you actually be able to buy up to $100,000 worth of stock or ETFs or options, whatever it may be, instead of just that $50,000 on us. But it does have a interest rate that it's associated with it that you tend to have to pay back as well. So that is something to keep into consideration. Now, when you have a margin account, if you don't know if you have a margin account or if you don't have a margin account, then, or want to get more information about how to set that up, make sure to reach out to your broker. They can answer any questions they have. Typically, you just have to fill out some paperwork, sign a few dotted lines, and you're good to go. So if you have that margin account, shorting is going to be pretty much as easy as buying a stock. Just, you have to click a different button. Instead of buy, you sell short. Now, here's the kicker with shorting though. Shorting can be a little bit more difficult because to be able to short a stock, you have to borrow those shares from your broker. Well, if you don't have those shares available, or if the broker does not have those shares available, then you're not going to be able to take advantage of that trade and you're going to have to look for a different candidate. So a good general rule of thumb, if you're looking to short a stock, is try to keep that price minimum greater than $10. Because in general, as long as the stock is greater than $10, it tells us, most likely that's a pretty reasonable stock or a pretty well-known stock. It's not a penny stock there. And so the broker most likely will have those shares available to be able to lend you, so that way you can short them. Now, if they don't, then you may have to move on. Another option is looking at a different broker. This is totally up to you. You don't have to, but every broker is different. So therefore, what one broker has in inventory, the other broker may not. So that could be, a potential hurdle that you would have to get over, and a question that you'd want to bring up with your broker and talk to them about. Some brokers out there are known for having a really large inventory, a good inventory to be able to borrow from. Some of them, the more discount brokers, the free mobile app brokers, if you will, they tend to have a lower inventory to be able to borrow from. So depending on your personal preference would depend on what broker you would use. And if you're interested in finding out more about what your broker has in inventory, make sure just to pick up the phone, give them a call. They'd be glad to go over that kind of information with you. So in essence, shorting is basically the same thing as buying the stock long, but as it goes down, you make money. So to give everybody a brief description or an example of how this actually works, like the mechanics behind it. Let's say you have 100 shares. You want to sell somebody 100 shares of Apple, but you don't own any shares of Apple. So what you do is you go to the broker. You say, I need to borrow 100 shares of Apple. They give them to you at, let's say, to make the math easy, let's say $100 a share. You take that and then you sell that to somebody else and they give you that money up front. So all of a sudden, once you sell that stock short, you have all of that cash right there in your account. Well, the stock goes down, let's say to 80. You say, all right, I've made $20 a share off of my investment, off of my shorting. I want to close this out. So you buy back those shares at 80. You pay them to your broker at 80. And then you're left with the remaining difference of $20 a share times 100 shares in your account. Easy. You made some money. You made $20 a share on 100 shares. Not a bad trade. Well, here's where things get a little bit different though. If the stock goes up and let's say it goes to 120 instead of the 80 that we were talking about in the previous example, well, now you have to go and you have to pay the person that you sold those shares to originally $120 a share, and they only gave you $100 a share. So that $20 a share comes from your own personal account. So you either have to add more cash into your account to be able to cover that difference, sell some of the stock that you have that maybe you didn't want to cover that difference, but you have to come up with the difference somehow to be able to pay your broker back that $20 a share difference. This is where the taboo aspect comes into play. A lot of people think, they say shorting has infinite risk, because if you buy a stock, let's say you buy Apple, you buy 100 shares of Apple at $100 and it goes to zero, your max potential loss is that 100 shares at $100. Well, the opposite can happen if you short a stock and it continues to go up and it continues and continues to go up. Well, technically or theoretically, a stock can go up infinitely. So therefore your loss is theoretically infinite. But here's the thing. here at VectorVest, we like to be more systematic, less emotional traders. And we tend to follow, a set of rules on our trading plan. If you take those kind of rules and apply them to a short trade, then that infinite risk goes to zero, and therefore it doesn't have that infinite risk. You still treat it just like you would a long trade, where you set your stops in place to make sure that you get out at your defined max risk. So I'm not going to go over all those rules here today because we've covered them a lot, especially over the last few weeks. So if you want to go and take a look at some of those rules for the long side, they can be adopted just for the short side as well. Make sure to go back and check those streams after today's stream. But basically, one of the key tips I will say though is if you are going to short a stock, and especially knowing is how fast stocks go down, and they go down they go down briefly but very fast, make sure to adjust your trading plan accordingly, so that way you can, lock those gains in quicker instead of letting them, continue to run for 6 months or so. Shorting is more aggressive in nature, so you want to adjust your plan or adjust a trading plan accordingly to be more aggressive. So maybe, lower your max target that you're shooting for to make on your return. And also maybe tighten up your max risk or your max loss that you'd be willing to take before cutting that position and moving on. If you're not right out of the gate, then most likely, instead of sticking around to find out, probably should just, cut it quickly, move on, and wait for a better opportunity to arise. Most stocks take a break after a bounce, just talking with each other. So yeah, make sure that you're adjusting your trading plan accordingly and making it more aggressive if you're going to be taking advantage of shorting. But with everything going on currently in the market, with everything, the market's been rallying the last few months, but still at the same time, the Fed has been talking about how we're just getting the very beginning part of disinflation. They could be, at this for quite a while, longer than what most people are probably expecting. We could see more rate hikes coming. Also, as Powell has said time and time again, we could also see them holding these rates at these higher levels for a lot longer than what most people are expecting. So therefore, that's going to cause an issue with companies' earnings. And once companies' earnings start to decline and start to really show a lot of weakness, that will lead to a larger decline in the market. So that's why we want everybody to be prepared now, rather than waiting for the market to decline a massive amount and then start talking about it. So what you're telling me is short the week of Valentine's Day. Ezo, I'm not telling you to take a short or a long trade at any given time, but I want you guys to be aware of this. At least start getting the wheels turning, so that way you guys can be prepared. Because as always, my trading plan is, or my guidance and my philosophy is rather be prepared and not need it than need it and not be prepared. So that's why we're going to talk about it here a little bit today, instead of waiting and then having you guys trying to play catch up, if you will. All right, so how can VectorVest, how can the Stock Advisory app help us take advantage of shorting? Well, VectorVest actually has some pre-built screens, and I believe Watchlist, which we'll take a look at in a second, that are designed to help you find stocks that would be good candidates to short. So if you recall, when we're looking for stocks we want to be buying, we tend to look for stocks with a high RV, a high RS, an RT above 1, an overall good VST score. A pretty fundamentally sound company. Well, just the opposite is true if we're going to be shorting. We want to look for stocks that have poor fundamentals, declining earnings, RTs below 1, showing a lot of weakness, because the stocks that aren't doing well, that are just being kept afloat by the market rising, are going to be the ones that drop the hardest once the market really starts to sell off. So starting off right here, worst stocks above 20. As always, you can click on that little I right next to the name. It'll give you a little description on what it's looking for. Finding stocks over 20, rated to sell. Worst VST stocks will come to the top of the list. And you can see the screen is intended to find stocks for short selling. So getting out of here, taking a look at some of the candidates. Very first stock coming up, Guardian Health. Let's take a look at the analysis, just like we would do on any stock that we were considering taking a long position in. Breaking down the 4 indicators here at the bottom. Cast on a scale of 0 to 2. Once again, above 1 is good, below 1 is bad. So the first one we look at is RV, or relative value, the 1 to 3 year long-term potential of the stock. As we can see, well below 1 tells us it has poor long-term potential. The next is the RS, or relative safety, which indicates how much risk is involved in this stock compared to the average stock out there. At 0.53, it tells us this stock has a lot more risk associated with it than the average stock in the market. Then third thing, timing. Timing, looking at the short-term price trend of the stock. Well below 1 tells us this stock is in a strong decline. So then the combination of these combine to get our overall VST score. Well below 1 tells us this stock is unfavorable on both a fundamental and a technical basis. So therefore, stock has poor long-term potential, a lot of risk, is in a steady decline, is not favorable. This is an ideal candidate to consider when looking for short trades. Wouldn't one be subjected to short squeezes happening in the market? So Amanu, yeah, I mean, that's a possibility, but so is if you buy a stock long and then all of a sudden, let's say it's a biotech stock. How many times have we seen where these short reports come out and put a whole bunch of information about a stock, showing how they're cooking their balance sheets, they're saying they're selling a whole bunch of product that they're not actually selling, making their numbers look good. You wake up the next day and the stock is down 50, 60, 70%. It's the same situation as if, that kind of a situation would occur. So, if you're worried about a stock having a short squeeze, by all means, move on to the next one. But if you're sticking with stocks that have poor fundamentals, that aren't in steady uptrends, that aren't really talked about on Wall Street bets, looking for short squeeze plays, there you are. And the same sort, a short squeeze can happen. So can, seeing the stock drop massively because of a short report that comes out, and the stock takes a huge hit, or bad earnings. We're finishing up earnings season, or coming into the second half of earnings season as we speak. So therefore, if you're looking for earnings plays, you're going to find a lot of poor earnings here. And if you're buying a stock long on an earnings play and the earnings aren't great, the stock drops significantly. Same situation would occur as if you were caught in a short squeeze. But once again, this is why we always talk about plan your trade and trade your plan. As long as you have a plan in place, if you get caught on the wrong side of a short squeeze, by all means, most likely you'll be out well before it really starts hitting its stride and making those huge gains or huge day moves that we've seen throughout the last couple of years on some of those. So, do your research, do your due diligence, but these are going to be some good candidates to consider here. So, next one, INBX, another one, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. Scrolling down, the stock is clearly well overvalued. It has negative earnings yield negative 14% a year. This is the type of stock we're looking to short. Let's see. Barely keep up with my long positions. Is this a better search than new sell rate or new sell stocks and Unisearch? So Alberto, both of these, and actually we're getting ready to take a look at that one next. Both of these are great places to go to find potential short trades or short candidates here. So I'm not saying one's better than the other. Both of them definitely have their value, and they're probably going to be similar. The other one, the new sells, are stocks that are just hitting that sell rating as of today, where these are the stocks that have a sell rating right now that have the lowest VST rating. So slightly different, but probably going to have some similar candidates in them from time to time. Taking a look at the next one, Sava, another one, poor fundamentals. This stock had a huge run, let's go 6 months ago. This stock had a huge run coming into September, but because it has poor fundamentals, the stock is not a fundamentally sound company, even with the market steadily increasing over the last 3 months, maybe a little longer. What has this stock been doing? Not participating in the market, slowly hitting lower highs and lower lows. So this one, a prime candidate. If the market starts tumbling, expect to see the stock that hasn't even been able to keep up in an up market really start to pick up or accelerate to the downside even more. Going to the next, NARI, another one. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable here. Getting into it, the stock is clearly overvalued. It's losing money quarter over quarter, year over year in its earnings, negative earnings here. Poor CI for anybody who follows that. There's a lot of red flags that we're seeing here. So that's what would make this a great candidate to look at if you're interested in finding some short trades out there. Now, as Alberto just talked about, we also have the new sell rated stocks. So if we take a look at that, simply pulling up the criteria for the scan, basically all this is looking for are stocks that are greater than or equal to $5 and they just hit a sell rating as of today. So if we go take a look at the companies that show up, NFE, this one, good long-term potential, but a little bit more risk than the average stock out there. So this is more of an aggressive play. Looking at the timing, 0.81, it's in a steady decline. Overall, the stock is favorable because of the strong RV, but with the low RS, the low RT, if you're more aggressive, this may be a candidate to consider. Going down, stock is undervalued currently, so maybe that would be one you probably pass on. You may want to add a little bit more, filtering of your own into this list compared to what we were looking at with the worst stocks above 20. NBIX, another one. This one, solid fundamentals, but the timing is off. It's steadily moving lower, most likely due to something regarding its earnings announcement or its last earnings statement. Timing 0.7 is in a steady decline, and the stock is currently overvalued as well. HP, another one. Good long-term potential, little less risk, but timing is off on this one. Overall, it's a good stock. So these stocks, you want to be a little bit more picky with which ones you're going to be getting into, which ones you're not going to be getting into. I'd prefer to see the stock at least overvalued. I'd like to see the lower RV RS ratings, but as we know, even the best stocks can go down in a down market. So therefore, looking at new sell rated stocks may be more advantageous when we get that market timing signal that would, indicate, okay, it's time to start looking at some short trades, such as like the DEW, confirmed calls even, or the RT kicker combo signals. Using this search or using this scan on those signals may be more advantageous in looking for specific days, stocks that are just hitting that sell rating on a DEW down signal, for example. So keep that, may be, something to consider as well. All right, and then under the premium watch list, let's see, do we have anything? We have contra ETFs. We're not really going to be talking about that here today. I don't believe there's any other shorting scans in the premium watch list here. So all of the short trade candidates are going to be coming from the screeners, featured screens, and you have worst stocks above 20 and also new sell rated stocks as well. Let's see, is there anything in the screeners? Explore screens. Scrolling down. Yeah, so you can go to the shorts and it tells you the two right there as well. There are some inside the VectorVest 7 desktop app. There's a lot more short candidates or short screens there. But for mobile, these are the two that we have that are, widely used, very common. And so these are the ones we have access to here. for the last 5 days. Do you have another preferred search like this one? So, Dr. Vic, honestly, I don't really have any preferred short list over another. I think, looking at the Derby, if you're on the desktop, I'm assuming you're talking about the desktop since you're talking about Vern's Vultures. So this isn't really applicable for the mobile users, but if you are on desktop as well, looking at the top Derby candidates or the top Derby results, looking for matches in the 1 and 5 day has always been a sound strategy to see which shorting searches are really performing the best in the current market environment. That's always been a pretty sound strategy to identify which shorting search is the best for the current market. I wouldn't stick to just force myself to just stick to one all the time. The stock just disappears. Probably Cecilia that it got delisted. That would be my best guess. On the mobile, once again, you have worst stocks above 20 and also new sell rated stocks. Worst stocks above 20 is going to be probably your more generic go-to for shorting candidates. The new sell rated stocks, you're going to get more benefit from it if you're using it with an associated market timing signal. The few examples I gave were the DEW down or a confirmed call down or a RT kicker combo down signal. Those are going to be your more preferred approaches to new sell rated stocks. So once again, you guys learned something today. If you guys enjoyed this, make sure smash that like button right now, especially if you're over on our Facebook side. Let's see everybody sharing that out. Let's continue to grow that community there. Can you short a stock as small as APPH? Chris, I think you can, but it really depends on your broker and if they have them available. If they don't have those shares available, then you may not be able to, but somebody at a different brokerage may be able to. So a good general rule of thumb is greater than 10, but if you're on like Interactive Brokers who has a very large inventory of stocks available, you may be able to pull or be able to get some of those stocks that are, with the lower dollar price range to be able to short. That's a question for the individual broker to see if they have those shares available. All right. So with that, this shorting the stock, come back and talk. Which stock? All right. So with all that, let's go ahead and do a little giveaway here. So what I'm going to do is get my mug ready. As I promised last week, we're going to be giving away a free VectorVest mug. So I'm going to think of a number between 1 and 100. And the first person to type in the number I'm thinking of between 1 and 100 will get the mug. And go. So, was the mug used by Glenn? No, it was not. Oh, already got it. Ezo Fitness won the mug, 77. That was the number I had in my head. Double sevens. I like that. Well done. So Ezo, you are the winner you were the first person to guess the 77 number there. Make sure to send an email to, what is it? VectorVest or YouTube at VectorVest.com, I believe. Let me see. I'm wondering if Joey or anybody is here today. I don't see anybody quite yet. Yeah, I'm not seeing anybody. You just like him? Honestly, I don't think I've ever met him, so I can't really say that. 7 was always my lucky number, and 7 is too easy to guess, so I doubled that and put 77. And Fireblazer, that would have been too easy. So 77 was the lucky number. Ezo, send an email to, actually, just send it to me. PatrickF@VectorVest.com, PatrickF the letter F as in Foxtrot at VectorVest.com. Send me an email with your username, and I think that's really about it. And also the best mailing address, and I will make sure to get this over to our shipping department, and they will get it out for you. So welcome, congrats, glad to see that there. All right, now that was pretty easy. Without further ado, let's go ahead and start to take a look and analyze any stock that you want to take a look at in less than 10 seconds. So if you have stocks you want to see, make sure to type it into the chat and let's get those going here. ENPH, Enphase, good long-term potential, less risk associated with it, so solid fundamentals. However, stock is steadily moving lower. Right now is not the time to be long in it. It's a good stock, just not the right time to be holding it in our portfolio. SU, great long-term potential, but does have more risk associated with it. You are starting to move lower here. Overall, it's a good stock, but just not the right time, once again, to be holding it long in your portfolio. THCH, poor long-term potential, a lot of risk involved with the stock. You are, though, in a really strong short-term uptrend. So overall, the stock is favorable for the speculative, momentum, day traders, whatever you will want to call yourself. But if you care about fundamentals, you're not a momentum trader, this is not the right stock for you. Enphase for shorting. So Enphase had that RT well below 1. You have good fundamentals, but yeah, I mean, it's in a steady decline. So therefore, take advantage of it. LABD. Let's see, LABD. Whenever looking at any ETF, your primary focus is RT because it doesn't report quarterly earnings like an individual stock does or an individual company does. So therefore, all you have to do is really focus on the RT. With LABD, the timing is 0.62, telling us it is in a steady decline. Therefore, this ETF is not favorable. ACLS. There we go. ACLS, good long-term potential, less risk associated with it. You are in a really strong short-term uptrend, so overall the stock is definitely favorable. Meta, META. Meta, poor long-term potential, but solid fundamentals. The company makes money. It is in a steady short-term uptrend, so overall the stock is favorable. Affirm. As a short trade. So, poor fundamentals, low RV, low RS. I like that automatically right out of the gate with Affirm. You are in a strong decline. Overall, the stock is not favorable. As a short trade, this is definitely what you're looking for. Like this one, Jay. MNSO. MNSO. Poor long-term potential. A lot of risk associated with it. However, it is making a move higher here. This RT 1.76, really strong short-term uptrend. Strong enough to offset the amount of risk involved in the stock. So therefore, the stock is favorable currently. VLO. VLO. Good long-term potential. Less risk associated with it. However, the timing slightly below 1. Telling us it is starting to go from an uptrend down to a downtrend. It is a good stock, but right now is not the time to be holding it in our portfolio with that RT right now. Lucid, LCID. LCID, poor long-term potential, a lot of risk associated with it. However, you do have a slight uptick on the short-term price trend, but not enough to offset the amount of risk. So therefore, the stock is not favorable right now. KROS. Poor long-term potential, a lot of risk associated with it. The timing, 1.09, it is in a slight uptrend on a short-term basis, below my personal threshold of 1.1, and not enough to offset the amount of risk involved in the stock. So therefore, stock is not favorable currently. UNH. UNH, Good long-term potential, less risk associated with it. However, you are in a steady decline. So overall, the stock is favorable, but not the right time to be holding it in our portfolios. T, poor long-term potential, a lot of risk associated with it. You are in a steady decline. Overall, the stock is not favorable here. TNXP, let's take a look. TNXP, poor long-term potential, a lot of risk associated with it. However, you are in a slight uptrend right now, but not enough to offset the amount of risk involved with the stock, so therefore it is not favorable here. Let's see, AEHR. AEHR, good long-term potential, less risk associated with it. Nice, strong short-term uptrend, so overall the stock is favorable. Apps, we'll do a few more here. Apps, good long-term potential, but a lot of risk to get to that potential. You are in a steady decline, dropping 23% here today. Overall, the stock is definitely not favorable. Let's see. WBD. WBD, good long-term potential, but a lot of risk to get to that potential right now. You are in a strong short-term uptrend. Overall, the stock is favorable. And then last but not least, we'll finish off with J's, Extro. Here we go. So Extro, it is a speculative play. You got poor long-term potential, a lot of risk associated with it. The company is not making any money right now. They're getting started to potentially make money, but not quite there yet. So therefore, the balance sheets are abysmal. The fundamentals aren't great. It's a speculative trade. But the timing, 1.33, it is in a strong short-term uptrend, but not enough to offset the amount of risk involved with the stock. So therefore, right now, it is still not favorable. Now, let's go ahead, jump back to the homepage, finish up here for the day. As we talked about, all the major indices look like they were softening throughout the whole session so far when we got started. From the open until we got started here today, all the major indices look like they were softening. Now look at them. The Dow is only up about 0.25%. NASDAQ's also up only about 0.25%. S&P's up about 0.2%. Same with the VectorVest composite. So all the major indices continuing to slowly sell off throughout the session here. If this trend continues throughout the remainder of the day, we could even see the indices all turning into the red by the end of the session. That's pure speculation. Not going to try to say, or nobody should, trade off of that. But just saying, based off of what we're seeing right now, we could see the markets potentially finish off to the red unless something else changes. So right now, that's why we have 3 yellow lights across the board, and VectorVest still does not advocate buying any stocks at this time. If we scroll down, MTI still softening as well. Price, RT is actually still remaining the same, but buy to sell ratio softening here today, now dropping below yesterday's closing numbers. Price, same situation. Advanced declines, now basically 1-to-1 rather than where we were at. We weren't at 2-to-1, but we were definitely a lot stronger than where we're at right now. Where the advances are sitting up about 46%, the declines down are about 42%, then the remainder unchanged. So be careful. This is telling us today is a day we just need to be extremely cautious, be patient, and wait for a better opportunity to arise to open up a new trade here. So on that, that's going to do it for me. Thank you all for tuning in. Ezo, make sure if you haven't already, send that email. We'll get that all set up for you, and we'll get this mug sent out to you as well. And thank you all for tuning in. If you haven't already, make sure before you leave, smash that like button, subscribe to the channel, or like the page, depending on where you're tuning in from here today. Share it out with all your friends and family. Let's continue to grow this awesome community. And as well, if you want to see more, make sure to come back around 2 o'clock Eastern, where Glenn, fellow colleague of mine, has Trending Thursday, where he talks about all the major headlines that are impacting the market and how to take advantage of them. So if you want to see some of those ideas he has in store, make sure to come back around 2 p.m. Eastern today. So on that, that's going to do it for me. Thank you all once again for hanging out. It's been my pleasure being with you. And until next time, take care, adios, and toodles.